Welcome back. You're watching the Small and Mid Cap Show, SMID, and over the next 30 minutes, we'll of course be talking to lots of managements to understand what the second half of the year looks like. We'll start off with Marico that reported nearly a 20% YOY rise in consolidated net profit for the second quarter, surpassing street expectations. My colleague Agam managed to catch up with Saugata Gupta, Managing Director and CEO of Marico, to understand what worked and what hasn't in the quarter gone by and the outlook for the second half of the year.
Firstly, I think we have seen a sequential improvement in volume growth. We have done 3, 4, and 5. Our diversification journey continues to do well. In fact, we have hit something like 21%. I think a couple of areas where, while the rural, consumption situation is improving gradually, and the urban top end is stable, I think we are continuing to see. We have seen some stress in the middle part of the urban, and the other consumer base. The second thing is, while we have done very well in foods, digital brands, and Parachute, Saffola has been steady. One portion of our value-added hair oils continues to, not do well. The category is getting commoditized, but I think the worst is over for that category. And what is also heartening, in spite of some of the volatility and other issues, our international business continues to hold steady, and it has delivered again another quarter of kind of a double-digit constant currency growth, with all the markets growing either in high single digits or double digits.
Right. So based on that, want to have your assessment of what we can expect with respect to one, the volumes in the second half of this financial year, and secondly, the pricing environment, because the fact that you guys have taken up price hikes is something which has also benefited you in terms of your top line.
I think the price hikes has been taken more towards September, so we will get the benefit of the price hikes more towards Q3 and Q4, which will lead to perhaps we are pretty confident of delivering a double-digit revenue growth in the second half of the year. We will also aspire, obviously, to make it a double-digit for the full year. Now, having said that, we believe there will be a sequential improvement in margins. We will be watchful of the overall inflation situation, and it will have some impact, as we indicated, in terms of our operating margin to the extent of 50 bips for the full year. But having said that, I think our endeavor is to maximize revenue growth and volume growth and market share. Historically, when there has been moderate copra inflation, which we have experienced, and not a very, very volatile this one, we have historically tended to perform better than in inflation than during deflation, as far as Parachute volumes are concerned.
Actually, that's the exact point that I did want to address, because you are indicating about a 40 to 50 basis points contraction in your EBITDA margins for the entire financial year. So what are those factors specifically, if you could elaborate a little bit more on that?
See, as you know, last year we had peaked. And secondly, if you have a significant, we have had a 30% increase in YOI on copra prices, we have had a 15 to 20% increase in other vegetable oil prices. Now, you have to take calibrated price increases. The consumption situation, it's not exactly very high tailwinds. I think it's improving. Yeah. So therefore, if you want to maximize revenue and and market share, you have to take calibrated price increases. And as I said, we operate in emerging markets around the world. It's very, very critical to continue to get volumes and market share and drive penetration. Margins a little bit here and there can always come back.
All right. So I'm assuming that you guys are being conservative at this point in time. My next question then is that with respect to demand, urban as well as rural, and there's a lot that's been spoken about as well, with rural now taking over urban growth. Any positive surprises that you may want to perhaps anticipate and not count on, but at least anticipate, that could perhaps counter that compression in margins?
As far as the immediate quarters is concerned, it's unlikely. But having said that, obviously, if overall, input costs go down, going next year, obviously, this margins will come back. But as I said, that 50 bips margin compression is something which we are not worried about. What we are far more, concerned about is, can we continue to deliver sequential increase in volume growth, as well as a double-digit revenue growth for the full year.
So tell us a little bit more about that in terms of the kind of demand you are witnessing in urban and rural areas. What is it that's driven volumes growth so far, and what is it that could potentially contribute to at least maintaining your volumes growth, if not grow further sequentially?
I think if you look at our urban portfolio, especially the diversified portfolio and even Saffola edible oil, we cater to the premium end of the urban market. We don't see any consumption stress there. I think we also have a significant portfolio in Parachute and the other value-added hair oils are concerned, which caters to both rural and urban, middle class and bottom of pyramid. I think if rural continues to hold steady, I think we should be able to deliver sequential volume growth, uptick as we go into the second half of the year.
All right. Well, looking beyond FY25, keeping FY26, FY27 in mind, any changes that you guys are looking to bring in terms of product line? And if you guys are not looking at a big change in product mix, perhaps lines that you guys are looking to focus on?
We will continue to aggressively diversify. So the food business, for example, if I look at the Saffola master brand today, food constitutes 30% of the Saffola master brand, edible oil is 70%. We expect that to move to a 50-50 within the next 3 years, and perhaps food will overtake edible oil. Food delivers a higher margin than Saffola edible oil. I think our digital brand's journey continues to do well. We want to double it over the next 3 years. We believe Plix and Beardo has the potential to make it to 500 crore brands over the next 3-4 years. So I think the entire diversification journey will continue to accelerate. As I alluded to, I think we should be one of the very few legacy, FMCG companies globally to have a successful consumer digital business, and that transition will help us, future-proofing the portfolio over the next 5 to 10 years.
Well, that was a fantastic quarter for Marico, growth on most parameters, and the outlook was looking very promising. From one solid earnings to another, Ask Automotive has